Hey everyone, this is your favorite radio host, your only radio host, Corinne Lafont on Between the Lines. And I'm always starting off my show being so thankful. I'm thankful to be here. I'm thankful that my purpose isn't over. And so I am still here talking, alive, breathing, looking beautiful as ever. So I am very grateful for that. I'm also thankful that it's a beautiful day. It has been raining a lot actually in Trinidad and Tobago where I'm broadcasting. And it's really sunny out. I love that. I love it when it rains and I love it when it's sunny. It doesn't matter to me. I appreciate it. I have with me Jim Mosquera. Is that the correct pronunciation?
Yes, it is.
Beautiful, Jim Mosquera. And Jim is here to talk about money, but we'll tell you what angle we're taking about that money. Let me give you a bit of information about Jim, and then I'll tell you the topic that we're talking about. So Jim is a published author of fiction and nonfiction and a business professional. He wants people to understand the world around them and think for themselves. I mean, that's the way to go. He's a principal at Sentinel Consulting, a boutique firm providing guidance to small and mid-sized business in the areas of alternative finance and debt restructuring. Very important topics. And today we're talking about financial viability for small businesses. Jim, welcome to Between the Lines.
Corinne, thanks a lot for having me on today.
Yeah, it's great to see you. It's great to have you. I know you're looking at my picture and you're not seeing me to actually talk to, but that's okay. The focus is on you. Financial viability for small business. Let me give you a little bit about my interaction with that. When I was in Jamaica, because I was living in Jamaica for 21 years, and I'm now in Trinidad and Tobago, I can relate to small business in that I don't even like to use the word small. I am an entrepreneur. I'm an online entrepreneur, but I've been dealing with the Small Business Association of Jamaica for some years. And I've been, of course, as an entrepreneur, I've been liaising with a number of other small businesses who are at different stages. And they have a concern. They have a concern in terms of sustaining, maintaining themselves. They're still having a challenge of staying above water. These are the concerns that they're having, and they want to be able to make their business work. Whatever their business may be, they need to be able to have their business work. And I want you to be able to give us a background as to what do you think is going on with small businesses in the environment today, and what they can do to protect themselves or foresee to be able to protect themselves going forward.
Yeah, and one of the things that I like to do, not just in discussions with people like yourself, but maybe if it's something more expository that I'm writing an article or in some of my books, is I think it's important to set a foundation or a background, if you will, for people to understand money. You said we were going to talk about money today, so yeah, that's one of the things we're going to talk about right now. And and more importantly, with respect to small businesses and mid-sized businesses or entrepreneurs, as you mentioned, where do they get that money? And I guess to set the foundation for that, most people normally would default to the banking system of whatever country they're involved in. And again, I live in the United States, so I'm more familiar with U.S. banking laws and regulations and so forth. But the general structure of banking, as it evolved, was probably very similar everywhere. And when banks first evolved, they were more set up to be think of it more of as a warehouse. So you had precious metals and you deposited precious metals with a warehouse or a bank, if you want to call that. And then they gave you a receipt that said, Corinne or Jim owns X amount of precious metals. And then you could actually use that certificate, if you will, in your business interactions. And no one was, dealing with the burden of having to carry around gold or silver, what have you. Because if you've ever actually physically carried gold or silver, you know how heavy they can be.
I would love to be able to carry gold or silver, right?
and it's not practical, but it established the foundation for exchanging value. And that's really important because what we have today is something very, very different. Well, anyway, so that's how banking really evolved. And for a while there, then banks could issue letters of credit, so you could travel, let's say, from your country, Trinidad and Tobago, you could come to the United States. Your bank would issue you a letter of credit, and it would say, well, Corinne has this much money on deposit in this bank, and Jim, you can deal with her in confidence because we, the Bank of Trinidad and Tobago, will certify that she has these assets.
Yeah.
Then over time, things changed a little bit, and in preceding the Great Depression, at least in the United States, you had banking that started to do not just this depository type function where you placed your money in a bank and then you use them to transact business. They started to actually get in the business of investing. And then we had the Great Depression. And then in the United States, there was a very major piece of legislation that was passed during the Great Depression that actually segregated the functions of commercial banking and investment banking. And that's very, very important because we operated that way for probably, maybe even 60 or so years, 55 or 60 years. And in the late 1990s in the United States, there was a revision of that law that then put those functions back together. The banking industry lobbied very hard to put those two functions back together. So now all of a sudden you had investment banking and commercial banking under the same roof. Now, why is that important? Is because when we had the first, internet stock bubble, or the dot-com bubble of 2000, then we had the great financial crisis of 2008. That occurred roughly 9 years after this law had been repealed. And so we introduced a great deal of risk into the banking system that had been, removed, if you will, for many, many years. And so what happened during the financial crisis was, of course, we know what made the news, and we know that there were large banks that, had to get bailed out by, the Federal Reserve, and this happened obviously in Europe as well. There were major pieces of legislation basically to kind of, quote, save the system. And what's happened since that time is something very, very important for small to mid-sized businesses. And this is the following, is that when the financial crisis happened and central banks all across the world started to drive interest rates down very, very low, and you could get very, very large companies, not the companies you and I are talking about here, that could borrow large amounts of money at very, very low rates of interest. Well, for other enterprises, it wasn't quite as easy. And so there was a burgeoning industry, if you will, that took off certainly at the time and after the financial crisis, which is what I call alt finance or alternative finance, which is how can you as a small business owner acquire money for your working capital or other needs that does not involve the commercial banking system. And that's what I do, is I represent companies that provide pools of money for that purpose. So what you have right now, in essence, is you have somewhat of a bifurcation between companies that can borrow at very low rates of interest and other companies, let's call it Main Street, that can't necessarily do that. And so the alternative finance universe is something that is not at the same rates of interest as you can from a commercial bank. But what happened after 2008 was the commercial banking industry, which normally is conservative by nature, and there's good reason for that because they have to protect depositor money as well. They retrenched a little bit more, and they became more reluctant, at least in the United States, to loan out money to small to mid-sized businesses. So again, it kind of fostered, if you will, more innovation in the financial industry, and people like myself that are there to help guide small businesses through this. So that's very important because, capitalization, as you know, is probably number one, the most important thing to maintain the financial viability of a business.
Yeah, because it's a struggle for a lot of the businesses in Jamaica to be able to get funding to start their businesses. Most of the businesses start off with, and I would think it's the same for anybody in the Caribbean, I would think, because you're starting off, you have a new idea. It's difficult to get funding. It may be just a bright idea you came up with or something you always wanted to do and you never really planned for it. And so to go to the banks to be able to get money, they ask you for this long list of things. You might not have the kind of credibility with the bank, to be able to go to them to say, oh, I have all these assets, all of these things. Most of the time when small businesses crop up, it's really your back is against the wall. And you have to do something to be able to make money. So you're not really prepared. You didn't plan for this. It may be something that they do after retirement. And they didn't really plan, even though they had how many years, 40 or how much years of their working life to plan for retirement. It's just like, hey, I'm close. And before you know it, they reach retirement and they just decide to start a business. So most of the time they use their personal funds to start a business. But over time, hopefully they build a certain level to be able to to probably even get a loan, a small loan, and kind of reinvest and turn over that money. What is the risk to persons using their personal funds for their business? And how, double question here, how, if using their personal funds, what would you suggest to them to be able to turn that money over as quickly as possible, and even probably avoid even getting a loan? And if they have to get a loan, what's the best approach?
Yeah, great questions. And you know, the genesis of any business obviously is that's what I'll call the seed capital. And so how do you get that seed capital? And again, I'll reference things in the United States because I'm more familiar with that.
Right.
In the United States, there is a program that is provided by the Small Business Administration, SBA, which is a partnership, if you will, that occurs between a bank and the federal government. Mm-hmm. And what the Small Business Administration does is they make pools of money available, again, typically for startup businesses, but it can be for other purposes as well. And what they say is, okay, Mr. Banker, you can loan out this amount of money to this entrepreneur, subject to the following regulations. And you mentioned the paperwork that's involved. And the SBA process can be fairly extensive.
Yeah.
And the SBA then guarantees a portion of that loan. It could be 70, 80%. So from the bank's perspective, their risk, if you will, has been greatly mitigated by this money that's guaranteed by the Small Business Administration. Now, sounds good up to this point, but the Small Business Administration requires certain things from that borrower, and some of that is what in the United States is what we call skin in the game. So what is that skin in the game? And oftentimes that skin in the game represents some financial contribution that entrepreneur is going to have for that purpose. So in this particular case that I'm talking about right now is that entrepreneur has to have some amount of capital already established in order to move forward with an SBA loan, to then they can hopefully get through their local bank to fund their business. The SBA loan, there's a couple of different programs for that. One's more for general business. The other one's more designated for real estate. But the key point, the key takeaway is that entrepreneur, that small business owner, has to have some skin in the game by virtue of capital that they've already have. Now, alternately, what can they do aside from that? In the United States, and actually, I should say even broader than that, there are campaigns that can be started on platforms like, I'll use Kickstarter as an example.
Yeah, the crowdfunding campaigns, Yeah,
exactly, crowdfunding, where, that can kind of, maybe start you up a little bit, to get to a point where, you get to a point where you can actually start something with your business. I'll give you a real live example of something where neither one of those cases applies, and yet a business can start. And that's something that's called like invoice factoring. I had a client that I consulted with recently where she's got a design for something in the apparel industry, and it's something to help cut patterns that somebody would use to create some line of clothing, and it's something that greatly speeds that process up. And so what happened was that she has a lot of experience in the industry, but she needs some money right now. Well, factoring is something that technically is not a loan, but there are companies out there that then will provide her some advance, if you will, because she's able to show some invoices, that she has some purchase orders, if you will, that she has for this particular product. Then that allows her to potentially borrow some money to work with her suppliers to then eventually deliver that product to her customers. And so there's some advancing, if you will, of monies ahead of that, before that customer actually has their final product. So in that case that I mentioned, if you've got something that you can monetize, if you will, via a purchase order, that's an option for you. You can also do that with invoicing or accounts receivable. So there's a way where you're technically not getting a loan from the standpoint of accounting purposes here in the United States, but you are able to achieve some funding. So you've got what I mentioned initially, which was the bank option through the Small Business Administration, or in your case, perhaps some governments. Maybe not funded, but supported option. You've got crowdfunding campaigns. You've got self-funding, if you will, and you've got this invoice and purchase order financing that I mentioned. One way that I've seen
the invoice thing, persons could easily come up with purchase orders. You could easily call your friends or ask somebody to send a purchase order. That could.
Well, yeah. And let me caution that. So what happens in those cases where you're doing invoice factoring or accounts receivable factoring is that it's very, very important at that juncture for this finance company then to determine the credit worthiness not of you but of your customers, and that's what's important in these factoring or accounts in these asset-based type loans, which is essentially the entrepreneur that's issuing the purchase order to their customer. It's more important for that finance company to know, well, what's the financial wherewithal of the companies or individuals, if you will. And it's much better if you're doing invoice factoring and purchase order factoring with another company as opposed to individuals, because then that finance company needs to understand, well, what's the financial wherewithal of that person that you're selling your goods to be able to pay, because that's how we're going to get paid back.
Okay, I got you. It's a struggle for a lot of small businesses. They're always looking for investors, of course, pitching their ideas, trying to get contracts, and they're not sound yet in their business. They probably don't have the years in, the sort of technical capability, the resources to be able to go for certain types of contracts, whether it's government, private, international, etc. And it's a struggle, and I want to be able to see, because we know that small business is really what drives a lot under the economy. It's like, they are really the ones that, I deal with so many of them. They're honest. They're real. They want to be able to pay their taxes. They're the ones that are normally paying their taxes, whatever small it may be. They're trying to do the paperwork. They're still trying to market, sell. And the larger ones are the ones that are always getting away. The larger ones are the ones that have the millions of dollars and they're avoiding the taxes. Why is that?
Well, and again, more familiarity obviously with U.S. laws, but so what happens with larger enterprises, they have better accountants, better attorneys. And one thing that's interesting that I mentioned, and I'll hold up one of my books here,
of course,
which is called
Escaping Oz.
Navigating the Crisis, is actually that book and a book that I published last year, which is this one, is called Escaping Oz: An Observer's Reflections. And what those books talk about, especially the last one that I held up, is one of the things that we've done as a nation is a nation, United States, and I think it probably happens in other countries as well. We ask the government to do more and more things for us. And one of the ways that governments do that is through regulation and laws, And laws at least take a body, an assembly of legislators to put something together and then, come to some consensus and approve it. But when you get to regulations, it's something that's totally, totally different. Regulations can be set forth by bureaucrats in the United States, federal bureaucrats, which are located in Washington, D.C. And oftentimes I shouldn't say most of the time, 99% of the time, there's a disconnect between, the impact that it might have on somebody and then the geographical distance, from where those laws are being applied. And I'm glad you mentioned the thing about the taxes, because probably in the United States, a great instrument of regulation and really politics is the U.S. tax code, which is this, voluminous, this Leviathan construction that, the people that might have a better understanding of that are going to be, tax accountants, attorneys, and so forth. So to your point, it's much more difficult for a small business owner to take advantage of some tax break that a lobbyist may have influence in Washington, D.C. to create a special tax loophole or credit or deduction for a very large, not even so much company, but maybe an entire industry. And so again, that's the tax code in the United States being leveraged for political purposes. And one of the things I argue in this book that I had up earlier is that we really need to kind of step back from that, and because we've asked the government to do so much that they're really encumbering not just on our personal lives, but in the discussion we're having here on a lot of entrepreneurial lives as well. That's going to take a sea change and probably some sort of a significant evolution in our thought, which I suspect probably will come in the years ahead. But to your point, it's much more challenging for that small business when they don't have a team of lobbyists in Washington, D.C. trying to do something specifically for them.
But that doesn't level the playing field, Jim. That makes it very unbalanced and unfair. They probably should have a certain playing field for the big guys and a certain playing field for the little ones, because we're all swimming in the same ocean. And
Well, and I'm glad you mentioned that, because there's a local publication here where I live in St. Louis, Missouri, which is a small business monthly publication. So it's all are geared on small to mid-sized businesses. And by the way, when I say small to mid-sized businesses, for me, I may be referring to a company that has 50 million in annual revenue. So it's still a pretty large company.
it is.
And one of the things I wrote about was that, especially after the financial crisis, that we've seen an increase in business deaths, so businesses dying in this country, relative to the births of businesses, and that's particularly troubling because the small to mid-sized businesses are the foundation of the economy,
Right.
and moreover, when small businesses fail, it has an effect on a community, on a locality, and so forth, and then it tends to drive people out of the workforce. For one, in the United States, we've seen some troubling statistics on, the workforce participation. You don't have as many people actively participating in the workforce like you think. And then it tends to drive people towards larger companies. Again, nothing wrong with a large company. I mean, I've worked for large companies before, and large companies, I mean, we want the small company to eventually become the large company. But we also need to understand, what the impact of tax laws are on to small to mid-sized businesses. Now, in the United States, we recently had some tax reform that, in theory, should benefit some small businesses. But we also understand, one of the things that it's done is it's allowed the large businesses to potentially repatriate some funds that they have overseas. But it's also allowed these large businesses to use their excess earnings, if you will, and do what? Buy back their stock or pay greater amounts to their shareholders via dividends. So some of the effect of the tax law, at least that we've had here in the United States, probably won't go to Main Street, I think, like a lot of people thought.
We are talking traditional, so far in our conversation, we're kind of keeping it to traditional. When I say traditional, I mean, brick and mortar businesses and stuff like that. I want to kind of move over to the online entrepreneur who has the ability to pull on funds from anywhere in the world. We're talking PayPal, we're talking Stripe, we're talking a number of other opportunities that allow them to have a business that allows them to have foreign currency coming in from all over the world. How has business evolved, and what is the impact of that in terms of its financial viability? I mean, to me, it looks like it makes it a little bit much easier, obviously, accessible, flexible. You avoid a number of those same bureaucratic type of things. Tell me, I mean, in your experience, because you're in the financial sector, you're dealing with this, there are people who are moving away from traditional brick and mortar. You're avoiding a lot of the traditional costs, rent, staff, all those different, consistent costs that you would have every month or every week. You don't have that for an online entrepreneur. How has things evolved, and what's the impact of that?
Yeah, I'm glad you mentioned that, because in my former career, I was actually involved in creating networks, and some of the, like the network you and I are speaking through today. I mean, those are some of the things I did before. So it's actually kind of refreshing, and it makes me feel kind of proud that I had some teeny weeny contribution to that. When I see companies connected, or people talking over the internet like this, because it was a very disruptive model. And as you mentioned, it's allowed people to have online businesses, whether they're kind of trying to create their own little mini Amazon model. I mean, I myself, I benefit from books that I've published that, I can do everything from my house. I can upload it to sites, and people can purchase them that way without ever having gone to a brick and mortar facility.
Right.
In this country, and since you've mentioned it, we were significantly overbuilt on the retail side. And so when people talk about Amazon being disruptive, and in this country knocking a lot of businesses that had brick and mortar locations out of business, I would argue that was part of the effect. But the other part of it is the fact that in the United States, we were way overbuilt. And especially where I live, I mean, I just saw malls going up left and right, and there wasn't the population growth here to support that.
Right.
But let me introduce something into this conversation that I think might be of some interest to your viewers and listeners. And we're talking about conducting e-commerce, essentially.
Right.
And within the scope of the last year or two, you've probably heard much more discussion about cryptocurrencies.
Of course, Bitcoin.
Bitcoin in particular. And I've written, some pretty decent articles where I've talked about Bitcoin per se and cryptocurrencies. And in the very first book I ever wrote in 2010, I talked about Bitcoin specifically, as being an economic disruptor. Now, we don't have enough time to get into the pros and cons of Bitcoin and so forth. But what I will say, though, is that the existence of cryptocurrencies, and then what I foresee is the continuing evolution of cryptocurrencies and the blockchain and so forth, is going to allow for what I'll call a disintermediation of a lot of the transactions that you see today that might occur internationally, where I've got to have dollars, and then I'm trading with somebody across the other side of the world that's got their own currency, and and typically those have to be bank type transactions. Now there are transactions that can occur within a cryptocurrency of your choice, whether it's Bitcoin or something else. There's also an organization right now that's called Stellar, which they have their own coin that's called Lumen. And a Lumen, what it allows to do is it allows people to sort of trade, if you will, transact commerce through this intermediary coin called a Lumen, or they can do it from within their own currencies. And so why I think that's very, very disruptive is imagine then a future where instead of having to go to your local bank to conduct commerce, if you will, with another bank across the other side of the world. And of course that, bank transactions that occur in that fashion internationally go through something called the SWIFT system, SWIFT.
Yes.
And why that's even important in this conversation is because, the United States has politicized, if you will, the SWIFT system to such a degree as to, punish other countries for not, playing how they want them to play in the sandbox. Countries like Iran and Russia, if you will. And again, this is not any sort of, indictment of U.S. foreign policy. I'm just kind of telling you transactionally what happens is, when you as a country get kicked out of the SWIFT system, that brings your commerce to, it grinds it down significantly to a halt. And so what's happening in other countries is they're saying, well, instead of having to play in this SWIFT sandbox, maybe we'll create our own sandbox, our own network, if you will, for bank transactions. So that's one thing to disintermediate. But then the other is, I don't need any of that. I've got an internet connection, and I've got, a trusted blockchain, and I've got a trusted, network provider like Stellar, and I've got a trusted coin like Lumen. I've just completely, gone out, potentially out of the banking system. Now, Lumens, they use the banking system will still use the Stellar network, but in another case, you and I can transact business now through some intermediary crypto coin and never touch the banking system whatsoever. Wow. So I think that's something that is a still developing, feature, if you will, of future e-commerce.
Do you think that we would reach a point of just going cryptocurrency totally and leaving out the bank? I mean, I'm into publishing and I deal with books. So, I coach persons into writing, etc., and get them published and marketed. Now, at one point, it was just traditional books, printed books. You feel the books, everything was just traditional. So when ebooks came about, it's like, what is this? It was new. I mean, it is still relatively new to a lot of people, even though it's been around for a little while. It's still new. But people were concerned. Would it replace traditional publishing firms? And we have seen a number of traditional publishers being forced to make the shift into ebooks, whether they understand it or not. They're being forced. It's a similar thing to what you're saying with the currency and the SWIFT, not playing in the sandbox. So I'm wondering now if that same sort of concern could be happening for the banks or for people wondering, would I have to not be dealing with cash anymore? Would I not be dealing with a bank anymore? Would everything be just crypto? Everything is so what intangible these days. Everything is so online, cyberspace, World Wide Web. Are we going to be moving in that direction? Not only moving, where there are people who are disrupting that, but would we reach a point of it will only be that?
Well, let me offer a very cautionary tale, and I will say no. I don't think that governments across the world, central banks, the International Monetary Fund, that you're not, at least probably in our immediate lifetime, we're going to see the dissolution of those models, or that they're not going to play in the financial space in some way, shape, or form. And keep in mind that they will adopt, they have been adopting, cryptocurrency models, blockchain models. The technology underlying all this is what's really going to live. And I make some comments in my fictional series that we haven't really talked about, but in my fictional series, you see this struggle. And in my fictional series is more near term. It's not anything that's like, 50, 100 years in the future. It's, it's much closer than that. And so, you might say some of it is not science fiction, but really more science fact. And it's, let's call it Jim's view of how things can happen in the future. And part of it is, you'll see people conducting transactions on cryptocurrencies that are maybe outside the sphere and control of governments worldwide. And what's important to understand there is, when you have something called, the black market, the underground economy, what we're really talking about there is something that occurs outside the purview of governments, right? And why are governments interested in knowing and facilitating things in an economy and keeping track of those things? Well, it's for tax revenue, right? And so if you have a world where you've got some part of the economy that occurs underground or in the black market or maybe in the future via even present term, the dark web, where you've basically disintermediated government, then the government's essentially lost some aspect of control of that. Now, I don't know a lot of governments that would just willingly accept, their disintermediation, because there's a lot of people that wouldn't like that model anyway. So my sense is, and then I talk about that in my fictional series, is that you're going to see this kind of struggle between, some part of the economy that wants to stay, let's say, underground and black and dark and maybe operating through the dark web today. And that part of the economy, is, unregulated. It's not taxed, obviously. And then you're going to have, greater technological innovation, within what we understand as money that probably is going to be cryptocurrency related. The central banks are going to adopt that, the International Monetary Fund and all that. So again, my view of the future is you're going to see kind of that struggle. You'll see, some people that want to, they want to stay outside of the government sphere, and then the majority will still be over here, because it's very, very difficult for a government to just willingly relinquish their authority, particularly on things that are financially related and affect their financially livelihood via the tax base.
I have just realized, Jim, that you are sharing your screen, which is why I found I couldn't manipulate my own screen. I realize you are sharing your screen, so I'm recording this. So here's what I'm going to ask you to do since you're sharing your screen. Could you bring up your website and guide us through?
Yes.
Guide us through, because I was trying to bring up, I have your website up, but I realized I can't share my screen, which it would mean that you would either have to stop sharing your screen, but I may not see you on video. That's right.
Okay, I just stopped sharing, yeah.
But I need you to come on the camera. Do you see the camera so that I can still see you? Or?
Yes.
Yes, beautiful. Okay. Beautiful. We got it.
Okay.
So I am sharing my screen here now, and everything is all perfect. So, right.
Yeah. So what you're looking at right now is the Sentinel. Is the Sentinel Consulting website, which has everything we talked about, for small businesses, mid-sized businesses, and so forth.
Okay. So you were talking about your fictional books. How can we get access to your books, resources? I see resources here.
Yeah, if you go, just open up another browser window.
Okay, hold 1 second.
Over there to the, there you go. And now type jimmosquera.com. So JIMMOSQUERA.com. And what you're going to see there is my portfolio of books that if you scroll down just a little bit, you'll see some of them.
Okay.
Yeah. And so the three books that start to the left, 2020, Rebellion, and Division, those are my three. That's my three books that comprise a fictional series, which it's a really neat blend of politics, financial crisis, cyber terror. Because if you look at that first book, 2020, you see kind of a cyber hacker type person there.
Yeah, it's kind of like the Matrix.
Exactly. Yeah. And so what you have is, you have this mixture of all those things, and the protagonist is a journalist. And I'm really excited about that book series. And the first book I published about 1.5 years, 2 years ago, and then the rest of them, the time after that. because it's kind of a cautionary tale, if you will, for all of us. But in the United States in particular, we have a fairly caustic political environment right now.
Yeah.
And there's a lot of things that are going on in the background that unfortunately the media doesn't really allow us to see, because, all the oxygen is consumed with the politics. But there's a lot of financial things that are occurring in the background, some of which you and I talked about today, that aren't really getting the attention they deserve. And so what I talk about is I kind of meld, the politics, the financial crisis. You've got cyber terror, cyber hackers and so forth, and how it's going to affect the country. Again, all through a story, is all fictionalized. And then, I happen to pick the protagonist, the main character. He's a journalist, and we know in the United States, a lot of the flack that the profession of journalism is catching these days. And so it kind of takes him, through that whole process of, kind of understanding, what should journalists do? How much information should they reveal and so forth. So, and I introduced some really interesting concepts there. And, some of the things we were talking about today about, if you have this kind of separate economy, what's going on the side, and people that want to, secede from the United States. So very, very interesting and powerful series. And then, the other thing we talked about earlier was, this is a book, Escaping Oz, An Observer's Reflections, which is really a series of a lot of short articles that kind of give people, help them recenter themselves in some of the discussions that they're having today.
Yeah, I find it interesting that you're a guy who is very much into finance. I really, that's not my area at all. I leave people to do what they're best at. and that's an area I really don't like to delve in. So I have my accountants and all the financial people. They do their thing. For you to be a nonfiction as well as a fiction author, that's very interesting. How do you manage to be both, to balance both, as well as have the time to write so many books?
Well, the writing, the financial stuff really kind of came easy to me, just because, over the course of my professional career, when I wasn't in this industry, I was doing something else. I was, doing stuff with, trading commodity futures, writing software for it. I mean, I passed an examination to become a commodity trading advisor. So it's always kind of been in my blood. And, I had a national column on this platform called examiner.com.
Yes, I know Examiner.
Yeah, and I did that around 2009, or right after the financial crisis, where I kind of talked about a lot of these topics. So writing about the financial stuff probably wasn't as challenging, and I was always a pretty good writer. What was really challenging was then trying to fictionalize some of this stuff and putting a series together, because now you've got to develop characters and so forth. So I mean, it was a good thing to kind of stretch me, if you will, mentally, and challenge me. And I have those books in electronic format, and I also have them recorded as well, where I've recorded those books.
On audio, so you have it in audio,
right? So I mean, you're in the publishing industry, so you know what I'm talking about, and so it gives you another market, if you will, to reach people.
Of course, have it in as many formats as possible: print, audio, video, whatever it takes.
That's right.
People learn in all different ways, and people are on the go, so it's easy to just download that if it's audio on a, what do you call that now, MP whatever, and you just push it in your car. You can listen to it on your way to work, which is where we spend a lot of our time and traffic.
That's right.
So it's best if you can utilize your time, as best as possible. So Sentinel Consulting, give us 2 or 3 things that you can help businesses, whether small, medium, or large. What are 3 services that you want to highlight before we wrap up the show?
I usually discuss my business, Sentinel Consulting, and having 3 pillars. Let's talk about the second pillar, which is alternative finance, what we spent a lot of time talking about today. If you're a business and you've been in business, let's say, 6 months, maybe a year, and you're looking for some type of financing, I've got a number of different programs for that. One of the things I've been doing within the last few months is kind of expanding the portfolio to include consumer finance options. And what I mean by that is, let's say you want to help your own customers with financing. And so I've got some programs now for automobile repair shops, auto body shops, and even furniture stores. There have been some surveys that have been conducted recently in the United States that said that, if somebody needed $500 for an emergency, maybe that's a doctor's emergency. What if it's a car emergency? Well, in the United States, depending on where you live, if you don't have a car, it's very, very difficult for you to get to work or do whatever. And that's not something that you can defer payment on. You know, the
Yeah,
guy that's repairing your car, they want payment right away.
of
So
course.
this is a new kind of a venture for me also, is to provide consumer financing, you know, for some of my customers.
Mm-hmm.
When we get a little bit further into the economic cycle, and you'll see some companies start to fail, and, you know, interest rates continuing their increase, stock market, you know, under more pressure, you'll
Mm-hmm.
see businesses under more stress, that they then could be at risk of going out of business. But maybe before they get to that point in the United States, they may be at risk of being sued and being taken to court. So one of the things we try to do there is, you know, maybe mediate, you know, some of that debt if it gets into the point where they're already in civil litigation, or maybe before then, help them restructure their company so they don't get to that point. I think that'll become more important here in the next couple of years, probably, as again, as the economy comes under more stress.
Mm-hmm.
So those are some areas I think I'd like to emphasize.
Oh, wonderful. And of course, I highlighted your website. So the most appropriate way for them to reach you is through your contact us page, which is there. Or is there any other way that you would want to suggest for persons
Yeah,
to?
that's a really good way. And we had my author page up earlier. So the
Mhm.
sentinelconsulting.biz is a great way, you know, for financial type, you know, consulting type issues. And then I would also encourage people to look at my author page, my author site, jimmosquera.com, because again, it talks about some of the stuff there. There's articles that I've written that, you know, kind of may overlap a little bit with some things that I do in Sentinel Consulting as well.
Very good. Oh my goodness, Jim, this has been a intense financial discussion. I mean, we touched on so many different things, and I mean, we could talk and talk about this all day, because there are so many facets in terms of, you know, money, and you know, money runs through everything. You need money. It's like oxygen, right? So
Right, and you know, it's rewarding for me to speak with people from other countries too, because, you know, you kind of share, you know, some of the challenges that obviously that you see,
yeah.
and they're probably very, very similar all across the world.
Of course, people think it's different, but it's very much the same. It's no different. It might be just a different country, a different time zone, but the challenges are the same. It doesn't matter where you are. Doesn't matter where you are. So it's good to learn. It's good to hear what's happening in the US. It's good to hear what's happening in the Caribbean. You know, so that we can learn from each other. We can find out probably what's happening there, and probably follow a model that we heard about. You just never know. So
That's
it
right.
has been great talking with you, Jim Mosquera, who has been to Jamaica scuba diving and having fun. Haven't been to Trinidad yet, so I'm inviting you over. I'm making an official public invitation for you to do scuba
I'm
diving.
ready to come visit. You have invite me over for a speaking engagement, and I'd love to come.
I will certainly put that on the consideration list. Thank you so much, Jim.
All
It's
right,
been,
thank you very much for having me on.
it's not a problem at all. It's my pleasure. Thank you.